Hi, welcome to the Market Alert for Wednesday, the 21st of March 2018, first day of spring and about time as well. Yesterday, the pound started off quite well, moving higher. Then we had the inflation figures and the market gapped down, big gap there. And the headlines yesterday, turning point as inflation falls to 7-month low. So this was the reason for the drop and the gap down in the pound. Very simple, as if interest rates aren't going up, it's no good for the pound. And then we see this continue lower, tries to bounce back, and then has been trading sideways ever since, waiting for today's FOMC meeting, live one, quarterly one with Powell. In the daily chart, you can see yesterday the market giving back again at the 140 level, currently trading at 140.09, so just above that major psychological level there. The market's got to now deal with the 76%, in particular this one, the 140.04 level. That's going to be the one that the market's going to have to take out. If not, then we're doing this going down. Simple as that. So today, UK, we've got average earnings index. That's out at 9:30. A few other bits and pieces, but it's over to the US today. Powell's first FOMC press conference, live one, which will be out at 6:30 p.m. for the actual conference, but the release of the interest rate figure, which you can see there, up 1.75 from 150 is where it's forecast. So they're continuing to raise rates, trying to normalise rates, offload the balance sheet at the end of a 10-year business cycle, and not a proper recovery either. So it's going to be interesting going forward. Like all of these things, it's a bit like an oil tanker. It takes a huge amount of stopping, but once it stops, then it takes a lot to get going once again, which means obviously as a metaphor for the business cycle, it's okay while the momentum's there and there's plenty of fuel, i.e. cheap money, moving the global economy, but as soon as that starts to dry up, as it becomes more expensive, then everything slows up and eventually comes to a grinding halt. Yesterday, let me just remind you in the daily chart first, because as I said, we had this price action, higher volume, market coming off the low, which is indicative of the market moving higher, which it did during yesterday's session. Nothing to write home about, though. As I said yesterday, that we could expect the market to trade sideways and in a range, because well, basically waiting for Powell today, and you can see all of these retracements, and then a bit of a spurt towards the end of the session. Don't know what happened here. There's something to do with this Cambridge Analytica pointing towards the helping the Trump campaign or what, I don't know, but it was soon shrugged off and the market brought back to the upside there. So fairly quiet day yesterday for the Dow, given the recent volatility in this market. So back to the daily. Well, not a lot to say. Let's say that apart from the market is just waiting for Powell to speak later on today. In the implied volatility, this was down slightly yesterday as well, from 1590 down to 1563 as the market traded sideways to higher there. Meanwhile, in Bitcoin land, I'll just get rid of these adverts. We can see we drew up these fibs yesterday. And you can see the market's traded up to 88. 88 isn't a fib retracement, by the way. It's just something I've been playing around with, looking to see how far a market will actually stretch itself before it moves back to the original trend, in this case to the downside. You know, are we getting this and then back down, or are we coming back down 76% and then up? We'll see. The market will let us know as it trades in these areas. Let me just get rid of some of these because it gets a bit too messy otherwise. That looks a lot better. So at the moment, 3 days up for Bitcoin. We've had Sunday, Monday and Tuesday. Well, actually Monday, Tuesday and the overnight Wednesday. This is it gets confusing with this one because it trades 7 days, 24 hours a day. But moving back to the upside there, at the moment there's no great volume in this market. Nothing to shout home about. A little bit on Monday there, but we're certainly reversed at the moment, and obviously shorts getting out of this market is going to also accelerate an upward momentum. The problem is you've got to have more volume to keep this going, and if you don't, then you get a resumption of the selling in the market there. Right, that's probably about it for today, because again, we're waiting to see what Powell's got to say tonight after they increase interest rates, and if they don't, there'll be carnage. So let's wait and see. That's at 6 p.m. 6:30 is actually addressing the press. Right, that's it. So if there's anything to report, let you know. Other than that, as ever, thanks for watching. See you in the next one.